Well, let's start off with whether or not you share that sentiment that's out there, that the relative inactivity we're seeing stems from the fact that several investors who've lost value due to the market slide are now indifferent, to price declines and would rather hold on to their stocks in the hope that they're going to recoup some of those losses moving forward. Do you share that sentiment?
That is, we share that sentiment indeed. We believe that, as we've seen with what's going on in the market, most of those who currently sit on positions have largely held on to those positions, anticipating that in the run-up to the end of the year, given what's going to happen with the banks, where they're essentially all going to hold back on lending, nothing much is going to happen in terms of demand in the market, because the banks also do, in some ways, drive that demand. So we anticipate that people are just going to sit in their positions and wait for the year to run out.
How long would they have to hold on, though? I mean, looking at this market gaining momentum, a lot of it is dependent on what comes out of the banking situation. The liquidity situation and the AMC are certainly not things that are going to be sorted out in the near term. So how long would these investors be holding on for? When do you see this market gaining some upward momentum?
Well, we have noticed, and I remember mentioning this once, that what has been driving the markets has largely been the institutional investors, who in some measure account for close to 70% of the activity on the market. And of late, in the past week or so, we've seen a significant slowdown in demand or in orders by this set of investors. They are all looking at a number of things, which you've rightly mentioned, one of which is the modality surrounding the setup of the asset management company. The CBN governor has indicated a tentative timeline of close of December this year for that to be effectively rounded up. It's the bill, supposing setting that up is still before the National Assembly. It's supposed to get accelerated hearing and hopefully get quick passage. We expect that would or should happen. Mm-hmm. The other thing, of course, is liquidity. We saw the CBN mop up some 60 billion naira of liquidity, over the past few days. That in itself is also an indication of the fact that they're also trying to contain, and not overheat the policy. We don't all revenues we expect also to go up on the back of recent increases or gains in terms of volume and output. However, I think primarily what we're seeing is investors are looking at essentially the intrinsic valuations, and are not willing, like you said, to pay any significant premium to what the market is currently dictating. And rather than drive up the valuations, by trying to mop up more shares, they would rather just sit on it and wait for possibly opportunistic trades or blocks that are available. We are looking at near term, possibly towards the end of Q1 of next year. After which time we expect that all the banks will hopefully begin to release their numbers to the end of December of 2009, and during which time we expect that some clarity would begin to emerge as with respect to how the sector, in terms of scenario, will begin to play out. We begin to expect that certain announcements will be made with respect to what parties may be emerging and how this market scenario will begin to shape up.
Victor, if we look at this with a bit of a broader perspective here, because a while back we had touched on the issue of the imbalance of the Nigerian market, of course, with the banking sector constituting 2/3 of the index. I mean, let's explore this issue and what kind of shift, if we need to see a shift at all, do we need to start seeing in this Nigerian market, in your books, where we have seen of late the consumer goods sector really alluring a lot of investor interest?
Well, yes, indeed. The consumer goods sector should primarily be the one to drive the market. Given Nigeria's population, I think it goes without saying that I think effective demand for consumer goods is fundamentally supposed to be a strong drive of growth. Unfortunately, we haven't seen as many companies listed in those sectors, and I think one of the things we would want to see going forward is a situation where, in order to more or less balance the market, we should hopefully get a few more companies also listing outside of the financial services sector. and these are companies which would love to see with, essentially very good business plans.
Well, certainly providing some encouragement, Victor, has got to be the fact that this consumer goods sector has shown resilience throughout this down cycle. Do you anticipate more companies within the consumer goods sector actually listing anytime soon, or would they have to wait for some stability and for some sustained upward momentum to hit these markets first?
I think the latter will be more of the case. There are a good number of them that have already begun to finalize plans to list. However, I think the decision to hold on to that actual event is a follow-on on the fact that people are looking to see more stability, hopefully better clarity, and especially respect to the regulatory functions of governing the operations in the market. People also looking, to potential companies, intended list, investee companies are also trying to get clarity as to how the market regulatory agencies will look post the whole banking supervision and banking reforms.